नमस्कार सभी को। Today I will be discussing about how to calculate manager's commission and partner's commission in partnership accounting. As you already aware that we had started partnership fundamentals from class 12th. So let's start the topic. Manager's commission on net profit. Always remember, commission is always calculated on net profit. Now there can be two conditions: net on profit before charging such commission and on profit after charging such commission. So you understand charge against profit. That means that expense need to be deducted from the profit. So from the left side, as you can see, manager's commission on net profit. On profit before charging such commission, the formula is amount of profit multiplied with rate upon 100. Whatever rate is mentioned there, that has to be multiplied with the amount of profit. And the second condition, if it is mentioned in the question that commission is to be calculated after charging such commission. So here amount of profit into rate upon 100 plus rate. So two conditions are given. How to calculate manager's commission? It is specified. Generally it is specified in the question on what condition you have to calculate. If it is mentioned that commission is to be charged before charging such commission on profit, here you have to calculate with the first formula. The formula is amount of profit into rate upon 100. And if it is mentioned to how to calculate manager commissions on profit after charging such commission, then here you have to calculate amount of profit into rate upon 100 plus rate. Okay, now let's see a question. The question says X and Y are partners. X is entitled to a salary of 15,000 per month and a commission of 10% of net profit before charging any commission. So on the above two conditions, which condition is this? Net profit before charging any commission. If you observe it, you will understand that this is the first condition, very clearly mentioned, right? 10% of net profit before charging any commission. As in the starting, first formula is before charging such commission. So our formula will be amount of profit into rate upon 100. Alright, now let's proceed in the question further. Net profit for the year is 4,40,000 and Y is also entitled to 10% after charging on net profit. So in this question, two partners are there. Okay, in that X is entitled to a salary of 15,000 and a commission of 10%, that is net profit before charging any commission, and Y is also entitled to get a commission that is after charging on net profit. So you see both the formulas will be used here. For X we will be using the first formula and for Y we will be using the second formula, as it is clearly mentioned how to give commission. X to be given before charging, Y is to be given after charging. So for your convenience, I have made a small profit and loss appropriation account here in the middle part, although I have discussed in my previous video, but for the sake of convenience I have made it here also. So let's have a quick revision of how to prepare profit and loss appropriation. We usually have 4 columns: particular amount that represents your debit and credit sides. On the debit sides, all the amount which is to be given to partners, like to salary, to commission, to interest on capital, to reserve, and to profit. Profit is the balancing amount is to be mentioned. And on the credit side, first of all you brought down the balance of profit and loss account which is mentioned in the question. Like that means if the net profit is given in the question, first that is to be credited, after that by interest on drawings. So seeing that format, let's move to the question. First of all you write profit and loss appropriation, then in the bracket for the year ended. In this question the year is 31st March 2018. Now two particulars may you first draw 4 columns: particular amount. Do not forget to write debit and credit. Now the first thing, to salary, it is mentioned X to be given 15,000 per month. So per month is 15,000. So we are recording it for the 12 months. So 15,000 multiplied with 12 gives you 1,80,000. Now let's come down to the commission. X commission before charging. So you know the formula, right? So amount of net profit is 4,40,000 into 10 upon 100. And for Y it is after charging commission, therefore the formula goes like 4,40,000 into 10 upon 100 plus 10, right? Because here it is I mentioned rate upon 100 plus rate. Here the rate is 10, so 100 plus 10 gives you 110. So remember, both the formulas are used in this question because X is given before charging commission and Y is given after charging commission. Then let's calculate profit. First of all, do not forget to transfer the balance of net profit 4,40,000 in the credit side, which is already mentioned here. So 4,40,000, salary is 1,80,000, commission of X is 44,000, commission of Y is 40,000. So let's calculate here balancing amount 4,40,000 minus 1,80,000 plus 44,000 plus 40,000. So here you will get 1,76,000. Now in this question, how to distribute the profit, it is not mentioned. So in the absence of any information, we divide profit equally, that is 1:1 ratio. So how to divide it? You see 1,70,000 into 1 upon 2, 1,70,000 into 1 upon 2. Alright, in the numerator you write the share of partner, and in the denominator you write the total of both shares. Like here 1:1, so 1 plus 1 gives you 2. And in Y, 1,70,000 into the share of Y is 1, divide upon 1 plus 1 is 2. Okay, that means out of total 2, Y share is 1, out of total 2, X share is 1, because they are sharing it equally, 1:1. So this is how I have calculated, and this is how the things go for calculation purpose as far as calculation is concerned. So this is the first question, how to prepare profit and loss account. I hope it is clear what we have done. Let's have a quick revision. Manager's commission on both ways, before charging and after charging. If question it is mentioned before charging, the formula will be amount of profit into rate upon 100, and if it is mentioned in the question after charging, the formula will be amount of profit into rate upon 100 plus rate. So in this question we are given X salary 15,000 per month, therefore we multiplied 15,000 into 12. 12 represents your 12 months. And commission 10% before charging, therefore the formula goes like total net profit amount is 4,40,000 into 10 upon 100, and after charging for that formula is 4,40,000 into 10 upon 110. So this way you got the calculation of commission. Then for calculation of profit, profit is the balancing figure, total of credit minus total of debit. Total of credit, which is 4,40,000 minus total of debit, 1,80,000 plus 44,000 plus 40,000. So you are remained with 1,76,000. Now how to divide this profit among these two partners? Since no ratio is mentioned, so we will be taking at equal ratio. So equal ratio means 1 upon 2 and 1 upon 2. So then let's see another question. X and Y are partners in a firm sharing profit and loss in 3:2 ratio with capitals 5 lakh and 2,50,000 on 1st of April. Each partner is entitled to a commission of 10% net profit remaining after deducting interest on capital but before charging any commission. Right. B is entitled to commission of 8% net profit remaining after deducting interest on capital and after charging all commissions. The profit for the year ended is prior to the calculation of interest on capital is 3,75,000. Prepare journal entries. So first you must know the format of profit and loss appropriation. So here the format is to salary, to commission, to interest on capital, to reserve in the debit side, and to profit transferred A and B if the partners are two partners. And in the credit side, P&L account, that means whatever net profit is given in the question, first it should be brought down. It should be recorded in the credit side and by interest on capital. Now let me explain you the question very clearly. It is mentioned that X and Y is having capital. X is capital 5 lakhs and Y is capital is 2,50,000. Here the point is, first of all, the profit which is given, it is before calculation of interest on capital. So remember, interest on capital is a charge against profit. That means while before calculation of net profit, interest on capital must be deducted. So here it is prior to calculation of interest on capital. That means interest on capital is not deducted. First thing, you understand this. Alright, then, well, this point is required when we calculate the commission. So first, whatever things are clear, let's understand that like the profit is given, so as per the format by P&L account, net profit. So first of all, we will just transfer this profit and loss account, which is 3,75,000. Profit and loss account, this is the working note, because in the question it is asked to prepare journal entries, and the profit and loss appropriation will be the part of your working note. Remember, in accounts, working note is very important. Working note also contains number, so do not forget to make working notes. Working notes and calculation is very important part of accounting solution. So let's move. Profit and loss account for the year ended, debit, credit, draw the 4 columns. So first of all, transfer the profit, which is 3,75,000 in the credit side. Then we will calculate the commission, the capital, interest on capital. So each partner getting the interest on capital is 10%. ठीक है, which is per annum, यानी yearly it is to be mentioned, yearly it is to be charged. So interest on capital for x capital is 5 lakh, so 10% of 5 lakh gives you 50,000, and y's capital is 2 lakh 50,000. So this way 10% of 2 lakh 50,000 gives you 25,000. So here the interest on capital is calculated. Now the second very important point is how to calculate commission, because for calculation of commission few conditions are mentioned. The first condition, see, each partner is entitled to a commission of 10% on net profit remaining after deducting interest on capital. So first of all, you have to deduct the interest on capital from the net profit, because it is mentioned in the question, the condition is given that you have to calculate commission only after deducting the interest on capital. So let's look into the working note which is in the right side, commission, right? So first of all, for commission, 3,75,000 minus 75,000. Why this 75,000 is deducted? First of all, you should know that the interest on capital is 75,000. If I add 50,000 plus 25,000, that gives you 75,000. Therefore, profit is equal to 3,75,000 minus 75,000. So here you get the profit is 3 lakh. Now on this 3 lakh, you have to calculate commission. Now let's see the interest that commission rate of x and y. So here you will see the x, each partner is entitled to a commission of 10%. So हर partner को हमको कितना percent देना है? It's just the 10%. All right, then let's see. This 3 lakh already got. So x commission before charging. So before charging, you remember the formula, that amount of profit into rate upon 100. So 3 lakh into 10 upon 100, that gives you 30,000. Look into the right side as the commission calculation is done there. And y's commission is, remember here, to calculate commission, right? To calculate y is entitled to a commission, remember this line, 8% of net profit. For y, the percent is 8, right? And it should be after deducting the interest on capitals and after charging all commissions. So we have already deducted the interest on capital 75,000, but now it is said ki commissions should also be deducted. That means the commission which is already been given to x, that amount should also be deducted before calculating this y's capital. Okay, so here you have to remember one thing. The questions language is very important. In accounts, question language is very important. If you fail to understand the language, what is asking in the question, then the solution may get wrong. So very clearly and very cautiously read the question. So let's see, after charging commission, so y's commission 3 lakh already. In this 3 lakh, 75,000 which is interest on capital deducted. Now from 3 lakh also we have to deduct the x commission which is 30,000. So 3 lakh minus 30,000, that gives you 2 lakh 70,000. And since y's commission is to be calculated after charging, right, on net profit, therefore the formulas for after charging is amount of profit into rate upon 100 plus rate. So the rate is 8 and 100 plus 8 gives you 108, right? So this way you get 20,000. So the commission is for x is 30,000 and y is 20,000. After that we will calculate the balancing figure. How to calculate balancing figure? Total of credit minus total of debit. So 3,75,000 minus 50,000 plus 25,000 plus 50,000, that gives you 2,50,000. So here the profit distribution, the question in this, you will see the ratio is 3:2. So how to distribute the profit? Look here. X is 2,50,000 into 3 upon 5. In the numerator you write the share of x and denominator is the total of both shares, like 3 plus 2 is 5. And for y, 2,50,000 into the y share is 2 upon 5, that is 3 plus 2. So in this way you get x share which is 1,50,000, y share which is 1 lakh. So this way the profit and loss appropriation account is completed. So remember, for the calculation of commission, what I did here, first of all I deducted interest on capital from the profit, because it is mentioned in the question clearly that commission should be calculated after deducting interest on capital and after charging all commissions. That means all commissions should also be deducted and interest on capital should also be deducted. Therefore we deducted from total net profit 3,75,000. First we deducted interest on capital which is 75,000. Already we have calculated. Then after that x X commission is before charging. So before charging formula is amount of profit into rate upon 100, and vice capital is after charging. So the formula goes amount of profit into rate upon 100 plus rate, and the profit and then the rate of commission is 8. Therefore 8 upon 100 plus 8, which is 108. Now the move to the journal entry. Journal entry is nothing but whatever you have made here in this account. Now you just have to pass, like whatever. See, profit and loss appropriation, this is the profit and loss appropriation account, and profit and loss appropriation is credited. Okay, so here whatever entry is made in credit side, remember that credit side represents the credit side of profit and loss account, and the debit side you will just write the this name. Like in the first entry, what we did for the first time, we transferred this profit and loss amount here. So the entry goes like profit and loss account debited to profit and loss appropriation account, because this is the profit and loss appropriation account, and it is shown in the credit side. It means profit and loss appropriation account is credited. So if profit and loss appropriation account is credited, then debit will be this amount, profit and loss account. This is just the general rule of ledger I am following, nothing special. Then on second is interest on capital, which is given. So interest on capital account debited to X capital to Y's capital. This is of the distribution, and transferring to P&L account. So here profit and loss appropriation is debited, right? So profit and loss account debited to interest on capital. So you see profit and loss appropriation account debited to interest on capital. Then again commission account debited to X capital to Y's capital. Then you see here commission account is debit, है ना, it is written in the debit side of profit and loss account. So whatever amount is written in the debit side, that represents that profit and loss appropriation account is debited, appropriation account is debited with the amount mentioned in that. So profit and loss appropriation account debited to commission account, and the lastly calculation, this transfer of profit is shown. So profit and loss appropriation account debited to X capital to Y's capital. So this is how the journal entry goes. Always remember, if you made an account, like here profit and loss appropriation account is made, any amount entered in the credit side, that means your profit and loss appropriation is credited by that amount. Any amount recorded in the debit side, that means profit and loss account is debited with that amount, and in the credit side you will show the name which is written against the amount. Okay, like here interest on capital is written on the debit side, it means profit and loss appropriation is debited with 75,000, and in the credit side you will mention interest on capital account. This is how the entry is made. This is the very simplest and shortest way to do the journal entries quickly.